GameStop. Remember the good old days when you could roll in there, buy a new game for $49.99, play it for a few weeks just to sell it back for $6 in store credit to go towards the next game? And then the cycle just continues and your money keeps going there over and over, even after you're married. You have 3 kids now, you're 26, and it's still going to GameStop. You're going to get the car fixed. You can't get it fixed. You need diapers. But you also need the new game. I'm not a bad dad. Right? What's up, YouTube fam? Welcome to the Jonathan Dearman Show, the least political show on YouTube. And today, big news, guys. Who would have thought that GameStop would be in the mainstream media? But it is the story of the day. And so I do want to touch on it. I kind of want to walk through exactly what's going on. You may have not heard anything about it, or you may have been seeing it all over the place, but not really know the details of what is happening with GameStop. So let me give you a brief overview here. So essentially what happened is the GameStop stock was going up on the high end, and because of that, hedge fund people, or people that are day traders and investors in the stock market, decided to do what's called short selling. Now, short selling means this. A short sale is the sale of an asset or stock that the seller does not own. It is generally a transaction in which an investor sells borrowed securities in anticipation of a price decline. The seller is then required to return an equal number of shares at some point in the future. So let me kind of explain what that means exactly. If I'm an investor and I see that GameStop's stock is really high, let's say it's at $200, and I really believe that the company's stock value is actually more like $50. So I currently believe it's way overpriced. What I'm going to do is I'm going to ask somebody that already owns GameStop stock if I can borrow their stock, and let's say I take one stock from them that I can then sell for $200, and in exchange for that, I promise that I will give them back a GameStop stock in a month's time, or whatever the set time is. And so these investors started short selling, which is they offered other people that already owned GameStop stock interest in exchange for them getting able to sell it right now, and then in the future when it goes way down, they'll rebuy GameStop stock, they'll give them back the amount that they agreed to, plus a little bit of interest, and that's where they were. However, what ended up happening is very interesting. It's kind of the first time anything like this has really happened in this way before. But there were a lot of people on Reddit and on social media sites that caught wind that investors were short selling GameStop, that they were convinced that it was going to go down. And kind of as a major slap to the face, this Reddit movement started this trend where people were all buying into GameStop stocks so that the stocks would keep going up, and all these investors would ultimately lose money, so that not only would they have to, after the allotted period of time that they had borrowed someone's stock, instead of going down, it went up. So now they have to rebuy the stock again to give the person that they owe the stock plus a little bit more money. And so, for example, if they borrowed it and sold it at $200 and then the stock shot up to $350, well, now once they owe the stock back to the other person that they borrowed it from, now they have to rebuy the stock at $350 plus the $10 they promised, or whatever it is they promised. So now they're out of pocket $150 from the stock plus an additional $10, so $160 each stock. And they normally do not trade in single stocks because, of course, there's not a lot of money in that. And so it is a big deal for some people, for some investors. We're in a little bit of a short squeeze, and I'll read the definition of what a short squeeze is. A short squeeze is a trading term that happens when a stock that is heavily shorted all of a sudden gets positive news or some kind of catalyst which brings a lot of new buyers into the stock. When this happens, the stock is being bought up and the shorts are now forced to cover their positions, getting squeezed out, which then results in more buying that can cause the stock to go up very quickly by a lot. In other words, when you have a lot of people that are short selling, that are borrowing stocks, selling them with the intention of rebuying back at a lower price and giving it back to the original owner with interest, and then for some reason the company gets positive press and the stocks start to go up significantly, well, now what you have is you have a whole bunch of new buyers that are seeing the stock go up, which start to buy in there, which makes it go up even more. And then you have all these short sellers that then have to buy the stock back then because they don't want to let it go too far up, so they start buying back, and then it just totally inflates the whole stock, and that's part of what's happening now. But the reason why this is so different than most of the times that this happens, which occasionally does happen, is because this happened kind of out of spite, which is so interesting. It's not that GameStop announced this great new idea, this new innovation that they have, or the new way of doing things that sparked market excitement. It was really just people on Reddit that saw what investors were doing and decided, as again a major slap in the face, to start a movement of people buying so that the investors would ultimately lose money and these hedge fund people and day traders would lose money. Now, with that being said, I hope that kind of lays out what's happening here and what's been happening with this GameStop situation. I do want to give just a little bit of my opinion on it, and then I'll pass the question off to you guys. So first of all, being a hedge fund person or a day trader in and of itself does not make you a bad person. So I do want to say this, that it's treated in a lot of ways like these people, like investors, they're all just, stealing all the money when we're in a pandemic and the economy is going way down and all that. But in actuality, when investors are investing into companies and they're buying stocks, it actually provides the companies with more capital to be able to keep their employees hired on, to hopefully expand and hire on more and more employees. And so stock buying in and of itself is not an evil thing. Where some people are upset at the day traders or at the hedge fund people is especially when they take risks and they lose on the risks, and then the government bails them out and the government comes and gives them money. That way they don't lose too much money. That way they can keep going. To me, I agree there. I agree that's a real frustration. I do not think the government should come in and bail out Wall Street or bail out investors. The government doesn't bail you or me out if we do some stock trading, which I don't. I think I've invested a total of like $600 in my life into stocks. I think I made like $40 and that was that. But for regular Joes or average Joes like you and me, the government does not bail us out if we make a bad assessment. And I don't think the government should be bailing out Wall Street or should be bailing out these investors. Outside of that, though, again, day trading and investing in and of itself does not make you a bad person, right? Are there some bad people that are investors? Of course, there are bad people that do everything, right? That's not particular to investors. So overall, it is kind of funny what happened with this whole Reddit movement. The fact that they were actually able to drive up a stock. There's kind of some humor to it, but at the end of the day, it's kind of not good either, because of course we don't want our stock market and people to not feel as comfortable investing into businesses because they're scared that little movements like this will start popping up all over the place. I don't think that's ultimately good for the economy and businesses and ultimately employees and people that work for especially larger businesses. And the people that are going to eat the cost here the most, yes, investors will lose significant amount of money, at least some of them will, through this whole GameStop trading thing. But also a lot of people that jumped in on this Reddit movement will end up losing a lot of money. You know who makes the most money is the people that started this Reddit and social media movement, because they got in early and then the buyers started flooding in and the price went way up and they got to sell their stocks and they got to make quite a bit of money on those stocks. But the people that got in later, those are the people that are really going to be jacked. And if we look at even the stock for today, it's crazy how much movement there's been even in just today in the amount or the value of these GameStop stocks. And so some people are going to be jacked here. Some individuals, not just investors. In fact, I should say many individuals are going to lose quite a bit of money here if they invested in this or they jumped on this trend late in the game, right? The last person in loses. And so as it's going back down, it's scaring people and it's causing people to start to sell more and more, which is making the price go down more and et cetera. And so it's all over the place a little bit. And the reason why it's big news is not just because we're in a short squeeze here with the GameStop stocks, but we haven't quite seen to this degree the amount of people buying the stocks simply to get at or to hurt investors. And so overall, honestly, not a huge fan of it. I get there's some humor in it, but at the end of the day, investors are people too. And I think anytime we try to hurt people just for the sake of hurting people, I don't think that's a good thing, even if it's kind of a humorous way that it happens. So overall, not a huge fan of it. I don't agree with it. Again, I don't think that all day traders and investors are evil. I don't think stock trading in and of itself is evil. I think, like in anything, you can have people that take advantage of others. You can have people that take advantage of the system and are greedy and all that. And some stock traders, of course, are that. But then you can also have people that are moral and that do try to be fair and they do try to be reasonable and they are trying to earn an income. Like all of us would be, right? If we were in stocks, none of us would pass up opportunities that we felt like would make some money because that's what your job is. And so I think it's unreasonable to be upset with them because they're successful successful. But we do have to acknowledge, like in any occupation, there are some people that are good, there's some people that are bad in their conduct, and that's that. But I'm not a fan of spiting people just to spite people. But what an interesting situation this is. Who would have thunk that GameStop would be in the headlines today? But it is, and man, GameStop is going for a wild ride. By the way, kind of a struggling company, not a super profitable company. Anyway, guys, I hope that kind of explains what's going on with the situation. With that being said, guys, I would love to hear your opinion. What do you think? Do you think this is what investors get for playing this game? Do you think that's what they deserve? Do you think that it's not right? Do you think they don't deserve that? It's kind of just overall a big joke, and it shouldn't be how things are done. I would love to hear your guys' opinion in the comments. As always, guys, thanks for tuning in. I appreciate you guys, and I'll see you all at the next Jonathan Dearman Show. Peace out.